The closing bell on Friday, August 15, 2025, left SoFi Technologies, NASDAQ, SoFi, at a price of 23.77. This marks a notable close for the week, pushing the stock up over 6% in the last 5 trading days. But let's be clear, a one-week snapshot is just a blip. The real story here is the consistent upward trajectory we've seen since the start of the year. A powerful move that's more than 250% over the last 12 months. This isn't a speculative pop, it's a fundamental re-rating of the company's prospects as it transitions from a high-growth, money-losing fintech to a diversified, profitable financial institution. For too long, the narrative around SoFi has been defined by a single question: can they truly become a profitable bank? The most recent quarterly earnings report, which came in with adjusted earnings of 0.08 per share, beating estimates by a massive 33%, has provided a resounding answer. This wasn't just a beat. It was a powerful statement from management. They didn't just meet expectations. They crushed them and then raised the full-year guidance substantially. This is the kind of momentum that matters. It's the difference between a stock you trade and a company you invest in. The market is now rewarding SoFi for its execution and for proving that its super app strategy is not just a marketing slogan, but a viable business model. What investors need to understand: the SoFi business model. SoFi isn't just a student loan company anymore. That's a relic of its past. Today, its business is built on 3 core segments. Lending. This is the bedrock. It includes student loan refinancing, personal loans, and home loans. This is where the company generates significant interest income. SoFi's loan book is not a black box. It's a highly sophisticated operation that leverages its tech stack and data to underwrite loans more effectively than traditional banks. The recent agreement with Fortress Investment Group to extend a $2 billion loan platform partnership is a key indicator of its strategy to shift towards a less capital-intensive, fee-based revenue model. Financial services. This is the growth engine and the super app in action. It's everything from checking and savings accounts with a SoFi bank charter, to SoFi Invest for trading stocks and crypto, to SoFi Credit Card, and SoFi Money for day-to-day spending. This segment is all about customer acquisition and deepening the relationship with its members. The goal is to get users to use SoFi for all their financial needs, driving cross-selling opportunities and a stickier user base. The recent expansion of its private markets access with new funds from firms like Fundrise and Liberty Street Advisors is a perfect example of how SoFi is innovating to attract and retain a high-value customer base. Technology platform. This is the B2B side of the business, anchored by Galileo and Technisys. Galileo is a leading payments processor, powering many of the most recognizable fintech brands. Technisys is a next-generation core banking platform. These two entities provide a massive, high-margin, and highly scalable revenue stream. The fact that SoFi is powering its own competitors gives it a unique strategic advantage and a predictable, recurring revenue source that is less sensitive to interest rate fluctuations. The financials. A look under the hood. Let's dissect the numbers that are driving the bullish sentiment. Revenue growth. The company has demonstrated impressive top-line growth, with recent quarterly revenue reaching over $858 million, a 43.4% year-over-year increase. This growth is broad-based, fueled by both the core lending business and the rapidly expanding financial services and tech platform segments. Path to profitability. This is the single most important factor. SoFi has consistently shown that its disciplined approach to cost management is paying off. The company's adjusted EBITDA is projected to reach $960 million for the full year, a significant jump from previous guidance. This profitability isn't an anomaly. It's the result of a multi-year strategy coming to fruition. Membership, product growth. SoFi continues to add members and products at an impressive clip. In its most recent report, the company had over 5.7 million members, and management expects to add at least 3 million more in 2025. This is a crucial metric, as each new member represents a potential lifetime value that extends far beyond a single loan. Balance sheet. While the company's cash and cash equivalents declined slightly, this is not a red flag. It's a reflection of strategic capital deployment into growth initiatives and loan originations. With total assets of over $41 billion and total equity of over $6.8 billion, SoFi's balance sheet remains robust and capable of supporting future growth. The analyst's perspective: a consensus shift. Wall Street analysts have taken notice of SoFi's operational performance. While the range of price targets is wide, from 6 to 30, the overall consensus is shifting. The average 12-month price target is approximately 20.11. Though this figure is a bit dated and doesn't fully reflect the recent surge in the stock. What's more important is the trend of analyst ratings. We're seeing more and more analysts upgrade their ratings and raise their price targets, citing improving profitability and the diversification of SoFi's revenue streams. Zacks, for example, currently rates the stock as a strong buy and expects an above-average return. A look at the charts. The technicals align. From a technical analysis standpoint, the chart for SoFi stock is painting a very compelling picture. Rising trend channel. The stock is trading within a well-defined rising trend channel. This is a textbook bullish signal, indicating increasing optimism among investors and a clear upward trajectory. Inverse head and shoulders. The recent price action has formed an inverse head and shoulders pattern, a powerful reversal signal that often marks the beginning of a significant upward move. The price has already broken through the resistance level, confirming the pattern and suggesting further upside. Moving averages. The stock is trading well above all its key moving averages, including the 50-day and 200-day. This is a sign of strong, sustained momentum. The 50-day moving average at 22.9 and the 200-day at 21.8 now serve as critical support levels. RSI. MACD. The Relative Strength Index, RSI, is currently at 62.5, which is in the healthy buy zone, not yet overbought. The Moving Average Convergence Divergence, MACD, is positive and trending upward, further confirming the bullish momentum. Key risks and considerations: a balanced view. No investment is without risk, and SoFi is no exception. A wise investor considers both the upside and the potential headwinds. Interest rate sensitivity. As a financial institution, SoFi's profitability is sensitive to interest rate changes. While its diversified model helps to mitigate this risk, a rapid increase in rates could impact its lending margins. Competition. The fintech landscape is fiercely competitive. SoFi competes not only with legacy banks but also with a new generation of digital disruptors. Companies like Upstart, Block, and others are all vying for market share. Macroeconomic environment. A recession or a significant downturn in the economy could impact loan demand and increase loan defaults, which would directly affect SoFi's lending business. Valuation. While the company is now profitable, its valuation, with a P/E ratio over 45, is still high compared to traditional banks. This reflects the high growth expectations, and any stumble in execution could lead to a swift correction. The bottom line: SoFi is no longer a story of what if. It's a story of execution and transformation. The company has successfully navigated the challenges of becoming a licensed bank, has demonstrated a clear path to profitability, and is effectively executing its super app strategy. The latest earnings report and raised guidance are powerful catalysts that have fundamentally changed the perception of the company. For investors, the key is to look beyond the short-term fluctuations and focus on the long-term thesis. SoFi is building a durable, diversified, and profitable financial ecosystem. While risks remain, the company's strong execution, robust growth metrics, and a compelling technical picture suggest that the future is brighter than ever. This isn't just a stock to watch.